All right, Apple. Today was the big Apple sell-off. Let's go over everything that happened, all right? Uh, okay, so Apple yesterday after the close, Tim Cook, CEO, came out and said that Apple's sales, which by the way, Apple's sales run about $260 billion annually. Let's just put everything in perspective. We're talking about a $21 trillion economy. It's the U.S. economy. 260 billion in sales. That's about roughly 1%, a little over 1% of GDP. Okay. So Apple said that its sales will be down 5 billion from what it had mentioned earlier, what he had forecast earlier. He said it's going to be down to 84 billion for the quarter, as opposed to 89 billion, 89 to 93 billion. So down 5 to 9 billion. So that's for one quarter. Okay, so even if you annualize that 20 billion, it's about a 9% drop. So Apple sales are down 9% on the iPhone, which, let's face it, the iPhone is basically Apple's sole product. It has made its vast fortune on its sole product. Now there's competition for iPhones, and let me tell you something. iPhones are getting very, very expensive. I have an iPhone. It's time for me to replace my iPhone, and I've been a little bit hesitant because they're just very, very expensive. iPhones are expensive. So it's natural. I mean, there's more competition. iPhones are getting very expensive. And people now are a little bit more reluctant to buy iPhones. By the way, Tim Cook, he didn't really blame it on the macroeconomic situation. He blamed it on sales in China. So it is really an Apple-centered problem. It's an Apple problem. It's not an economy. It's not the problem of the economy. As a matter of fact, we saw today news that was completely ignored. The API payroll data, 271,000 payrolls. They were expecting 188. It came in at 271,000 payrolls. Tomorrow we get the jobs report. The U.S. Labor Department puts out its its payroll number. And by the way, I sent that out. I sent that email out, my forecast to subscribers. If you want that email, go to my website, pitbulleconomics.com. So the Dow sold off 600 points, the NASDAQ down about 3%. By the way, the S&P 5 days ago was what, at 2350 or something like that? Now it's at 2450, so it's 100 points higher, even with today's big sell-off. 5 days ago, it was 100 big points down, all right? So let's not lose perspective on that. It's 100 points higher, even with today's sell-off. Now, the market right now, it's very interesting what's going on because you see Fed fund futures actually starting to price in rate cuts. All right, so the market now is saying the Fed's no longer going to hike in 2019, no hikes in 2019. You're actually seeing some of the probability rise in for even rate cuts in 2019. And then significant probability in the beginning of 2020 for rate cuts. Now, the market is pricing in a recession. And I am telling you right now, there will be no recession. And I am saying that with absolute utmost confidence because I can point to record fiscal support. I can point to expanding bank credit, loans and leases, etc. I can point to a strong labor market where we see the indicators on a weekly basis. I see them on a daily basis. Everything I look at is on a daily basis. My information is real time. Nobody else has that. I mean, I know how to get information from the daily treasury statement that nobody else understands. So my information is daily. It's real time. Everybody's looking at data that's 30 days past. We are not going to have a recession, but the market is priced right now for a recession. By the way, Jeremy Siegel, who is a University of Pennsylvania Wharton School of Business, by the way, I went there, U of Penn, Wharton, finance professor, who's very, very good on the market. He got bearish on the market around September. And of course, I sent out my email to subscribers on October 4th saying a significant correction was coming. I jumped back in a little early, but that's fine. Jeremy Siegel says, we are not, he actually is saying the same exact thing as I'm saying. We are not going to have a recession, and we are going to have a very, very good stock market as a result, because the stock market, it went too far on the upside, and now it has gone too far on the downside. We are not going to have a recession. And again, you could point, I look at the fiscal flows, which are extremely supportive. I look at bank credit, which, by the way, has been turning up since November. Now, we did have a period of noticeable slowing in bank credit, loans and leases, all of the banking metrics, etc. But since November, they have really been picking up steam. So that has been happening as the stock market has been falling. Now, if the stock market sell-off was actually translating into broad economic weakness, you would not see loan demand picking up. You would not see loan creation picking up. You would see it dropping. As a matter of fact, not just slowing down, you would actually see it contracting as we did in 2008 and 2009. That is not happening. Industrial production at an all-time record high. Capacity use going up. By the way, oil was up today back over $47 a barrel, even with this sell-off. So we did not have the link there, the coupling of oil to the stock market. That may be broken now, where oil is moving back up. By the way, also, if you look at things like gasoline demand turning back up, distillate demand, that's diesel fuel, that's used in commerce, in trucking, that's at an all-time record high. If you look at crude exports at a record high, if you look at refined product exports at a record high, why is that important? Because exports would not be at record highs if global economic growth was weakening. So you have all this data, and then you have market action. So you have the actual reality of what's happening in the economy versus investors going crazy. By the way, you cannot really read anything without some dire doom and gloom headlines. Here's another thing. For example, today, ISM manufacturing PMI came in at, 54.1. The headline on that, which, by the way, anything above 50 is an expansion. And that wasn't 50.1, it wasn't 51, it wasn't 52, it wasn't 53, it was 54.1. That's expansion. But the headline was, manufacturing the weakest in 2 years. Well, it may have slowed down from the peak, but it's still in an expansion. Everything here is in an expansion. So the headlines are dire. They're doom and gloom. It's terrible. Now they're saying there's going to be Fed rate cuts, and the Fed might very well pause. It probably will pause because it's a slave of the market, whereas as the monopolist, it should lead the market. But it has always been, because those guys and girls on the FOMC, they're mainstream economists. They are completely out of paradigm when it comes to understanding the monetary system. They still think we're on a gold standard or a fixed exchange rate. They think banks lend reserves, which they don't. Deposits. They don't understand that loans create deposits. They think that China sets our interest rates. All of these things, they're completely backward on all of these issues, and they really don't understand them. So they may well follow what the market is saying right now. But the market is wrong. We're not going into recession. This is an overshoot on the downside. Today's action was ugly, but it will likely be reversed in the next couple of days. Will be higher. And ultimately, the stock market will be higher as we look down the road in 2019. That I can assure you. So that's what happened today. It was an overreaction. One company, by the way, Apple's a big company. Don't get me wrong. But there was a day when GE used to be the leader of the stock market. There was a day when Sears Roebuck used to be the leader of the stock market. I mean, companies come and go. They see their time in the sun, and somebody else comes along, some new technology, some new way of doing things. Look at Amazon. Nobody predicted that. The guy was selling books online. Who would have thought it would become as big as it has become and as influential? In the old days, not too long ago, it was Walmart setting prices. Now it's Amazon. So, I mean, this stuff happens. Nokia, when they first started really putting out mobile phones, I remember I was living in Europe at the time. Nokia was the biggest manufacturer, the biggest maker of mobile phones. Finnish company. You don't hear about Nokia. I don't even know if they exist anymore. So economic growth does not rest upon one single company. It's just kind of funny what happened today. Kind of ridiculous. But don't worry. It'll all be fine. See everybody tomorrow. By the way, if you want that email with my forecast of the jobs report, I always get that on the button, which is the amount of deviation above or below the consensus. That's the part that's important. That's the part that moves the markets. I have that. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader or my Forex trading service, Zombie Trading. See everybody tomorrow. Bye-bye.